Everyone, welcome back to the channel. Today, we're talking about what's really happening with Kaynes Technology, India's premium electronics manufacturing company, after a sudden wave of concerns around non-disclosure of related party transactions. The stock is currently trading near 38.45, and investors are asking the obvious question: is this a buying opportunity or is it a red flag? Let's break down the story calmly and clearly. Over the past few weeks, Kaynes has come under pressure after analysts spotted gaps in the company's standalone financial disclosures. A closer review showed some related party purchases worth roughly 180 crore, payables of close to 320 crore, and receivables around 190 crore, visible at the subsidiary level but missing from the standalone books. That raised eyebrows because related party disclosures are a basic regulatory requirement. And when something that fundamental goes missing, confidence takes a hit. The market reacted instantly. The stock dropped 6%, then 10%, and continued to stay volatile. Clearly, this wasn't a small issue. Kaynes later responded, saying the omissions were inadvertent and that their consolidated financials already included these numbers. They also confirmed that the missing line items have now been added and promised stronger reporting and compliance going forward. The clarification did help calm the market a bit, but trust issues never heal overnight. Governance concerns like this always take time to fade. Now, stepping away from the controversy for a moment, let's talk about the business itself. Kaynes is one of India's fastest-growing EMS companies with exposure across automotive, industrial, defense, aerospace, PCBs, and IoT manufacturing. India's manufacturing momentum and the global China Plus One shift put Kaynes in a strategic position. Revenue growth has been solid, margins have expanded with scale, and the order book in automotive and defense remains healthy. So fundamentally, the business model still looks strong. This entire episode is more about transparency than performance. On the technical front, at around 38.45, the stock is stuck in a highly volatile range. Support seems to be forming between 3700 and 3760, while resistance lies near 4050 to 4150. Trading volumes show that most investors are staying cautious, waiting for clarity before taking any big positions. That's why the stock has been moving in tight trades over the past few sessions. Now the big question: should you invest right now? For short-term traders, the answer is probably no. The sentiment is shaky, the news flow is unpredictable, and any update on compliance could swing the price quickly. But for long-term investors, the view is different. Kaynes still represents a strong growth story in Indian electronics manufacturing. However, governance flags cannot be ignored. If you believe in the long-term potential, the smarter route is to accumulate gradually on dips, but only after the next set of disclosures are released cleanly and confidently. That way you're investing in clarity, not confusion. So that's the complete picture: the controversy, the fundamentals, and the guidance you should actually follow as an investor. If you found this analysis helpful, don't forget to like the video, subscribe for more updates, and share your thoughts on which stock you'd like covered next. Thanks for watching, and see you soon in the next one.